What's up guys, welcome back to another video. In this video, I'm gonna talk about one of the biggest questions that I get asked all the time, and it's probably on your mind as well. And that's, how do you go find a good real estate investment that pencils in this crazy market? So I love the question because I love the answer, and we're gonna dive into that right now. So you're most likely watching this video because you have the question and it's been on your mind, and maybe you've been looking for properties, but ultimately you can't find anything that pencils. Maybe you've submitted offers and it's been crazy and it's been outbid and it's been for all cash and over asking. Like, it's okay if you're feeling this way because you are not alone. Now, here's the good news. There is a solution to this, okay? And that's what I'm gonna dive into. So we're gonna talk about 3 things, and as you apply these 3 things, you're gonna start to realize, like, holy smokes, there actually are a lot of deals to be found out there, and just if I shift a few things, I'll be able to go find them. So the 3 things I'm talking about are 3 F words. Not the F words you're probably thinking about, but 3 other F words that help you get high returns, okay? Now the first one is the word find. Okay, we're gonna dive into the way that you find a deal changes everything, and it can make or break the deal. The second word we're gonna talk about is fund. The way that you fund it or finance it changes everything. Now we're gonna dive into this one, but it's completely different based on the terms that you set and the financing terms. You can take a deal that you might get a good price on it, and it can turn into a bad deal if you fund it the wrong way. And you can take a property that you overpay for, and it can turn into an amazing deal and an amazing property if you fund it the right way. And number 3, which is my personal favorite, is the word force. Now what I mean by this is, if you force or get creative, you can force a good deal. Now what's cool about this strategy is you almost put on these glasses that allows you to look at the same property all of these other investors or all these other people are looking at, but because of your glasses, you can see things that they can't see, which turns it into a good deal, where in their minds it might be one that they pass up on. So we're gonna dive into a few things that you can do to kind of apply these 3 things. Okay, starting off with number 1, which is finding it. Now, this is really important. If you look where everyone else is looking, you're going to find what everyone else is finding, which right now, what everyone's finding is the market's too high, things are saturated, right? There's so many offers, things are going for all cash, I can't compete with that. That's where everyone is looking. So what you need to do is look somewhere else. Now what I mean by this is, what do most people do when they're looking for properties? They usually have a real estate agent, and as soon as something comes up on the MLS, which is the multiple listing service is what it stands for, I think, it hits the MLS, this database, all the realtors see this, right? And they know they have these clients that are looking for homes, and so they blast it out and they say, hey, this just hit the MLS. You want to go look at it? You might be interested in this, right? Well, right now there's a lot of money floating out there, and so as soon as a deal hits the market, if it's a good deal, what happens is automatically a bunch of people jump on it, right? Because they're looking all in the same exact place. So one thing I want to kind of help you understand is, if you can look in these different places where people aren't looking, you can kind of find better deals because there's not as much saturation, there's not as much competition. I'm going to give you a few examples, okay? One of these examples could be, you could look on Facebook. This could be Facebook Marketplace, where someone's going to list a house for sale by owner, right? Not with an agent. Less people are going to see that. I've bought deals off Facebook before. I've bought deals off Craigslist. I've bought deals off of KSL. Basically, where people will throw them up there because they're not exactly sure what their home's worth. Maybe they're motivated, but other people aren't necessarily going to KSL or Craigslist to look to buy a home. The second thing that I'm going to help you understand is this concept called driving for dollars. Now, I love this, and my wife actually gets super frustrated at me because I like taking a different route home all the time. She's like, where are we going? Like, of course, we're gonna drive down this random street again. And I love it because one of 2 things. One, I can see these for sale by owner signs that I might miss, right? A good example is, we bought a property one time and my wife actually found it. We could call it walking for dollars, but she was pushing a stroller and there was this tiny for sale by owner sign, and it was posted up kind of in this tree, really hard for people to see, right? Once again, looking where no one else is looking. How many people are driving up and down streets streets trying to find for sale by owner signs, right? He didn't have it listed anywhere else. This guy was older. He owned the house outright, and we went over, looked at it, and put it under contract that night, and ended up being about $30,000-$40,000 under what market value was. And then we ended up renting it out and cash flowing really, really well on this property. The second thing that Driving for Dollars does is it allows you to see certain homes, right? That maybe they're in a good location. And so you're like, I really want to own that house. For me, like I love houses by college campus because I know it's always going to be in high demand for students to rent out, and I can rent it out by the room and charge more. So I love this because I can see these homes that maybe there's, a bunch of weeds in the front yard. Maybe it's a house that looks like it's not being well taken care of. And so what's cool about that is I can capitalize on this opportunity where a lot of people aren't doing that. A lot of people aren't putting in that work, and they don't want to because they view it as like a dive or a dump. And what ends up happening is I can call on that. It might be a distressed, homeowner. It might be an out-of-state homeowner that just doesn't want to deal with it and they're renting it out, and you can swoop in and offer to buy it from them. I'll give you one more example of the way that you find a deal can get you a really, really good deal on the property. And this example is things that come up. Everybody might see them, right? It might be on the MLS, but you look for certain things. A good example is, maybe you look at the oldest listing. We bought a property one time because I just searched and I said, what's the longest listing in this area? It ended up being over 5 years, right? And it was still listed, it was still active. And we called them up and we ended up buying the property for less than a third of what they had it listed for. It just became that time where they're like, hey, I'm ready to sell this thing. Like, we've had it on here for 5 years. We're like, hey, let's make this smooth and easy. Let's get you some money, and like, you don't have to worry about it anymore. And we picked up this really, really good property. Once again, we fixed it up, rented it out, and it cash flowed extremely well. Another example is a property we recently bought where what happened was it was posted even on the MLS where everyone else can kind of see it, but there was one picture and it was a crappy picture. It was bad. And so by default, a lot of people are thinking like, oh, that's horrible. I can't believe they're asking that much money for that house. And there's no way, like, they need to post more pictures. It's probably run down on the inside. That's probably why they're not posting them. Well, where there's more risk, there's also more reward. And so diving into that, we actually put under contract only seeing one picture, which is a crappy picture. And it turned out to be a home run because we already had it under contract by the time we were actually able to see it. And just kind of a side note, don't be stressed out about having something under contract. You could always back out of it. You can always get out of it, right? So don't stress there. But we put it under contract, and it was cool because really we got the appraisal back, and it was multiple hundreds of thousands of dollars above and beyond what we went under contract for. So just having this foresight of like what to look out for and the way that you find the deal can really make or break the deal. Number 2. Now this one can go really, really deep, but it's this F word, fund, right? The way you fund it or the way you finance it makes all the difference. Now what I mean by this is you can sell or finance a deal and you can set your own terms. You guys that know me, I'm big on cash flow. I want to figure out how can I cash flow the most amount of money possible, even more so than how much appreciation's in there. Like, what's the cash flow that's coming in every single month that can really like give me more freedom in my life? And so you can negotiate these terms. Maybe it's an interest only payment for the first 10 years and then it balloons after that, but because you're able to only pay interest only for 10 years, you were able to collect so much passive income that you got all your money back so quick and you just crushed it on the investment. Another more simple example of this is the amount of cash that you put down when you finance the deal makes all the difference. Right? If you have to come up with cash or 50% down, that's so much cash, right? And it's hard to get a good deal when you're forking over so much cash because the definition, right, or one of the definitions of a good deal is how quick you make back your money that you invested into the deal. So if you invested a ton of money, you're only going to get that back so quick. And so we explore a lot of strategies and we dive into it, especially within real estate investing school. And if you guys are interested or you want to book a free call, you can always click the link below and sign up for a free strategy call with one of our coaches. We'll just dive into really what you're going through and where you're at, whether you're just getting started or you want to scale, whatever it is. And you can see if the school and the one-on-one coaching is a good fit for you. But within the school, we really talk about all of these strategies to fund it properly. All of the strategies that allow you to put the least amount of your own money into the deal to get the most amount of money out. And a good example is maybe house hacking, where you owner occupy the property for a little bit. Another example is partnering, right? Where someone else brings in all the cash, but you found the deal and you structured it. So now you're into it very little, if any cash at all, but you're still splitting the upside. There's so many other strategies like the burst strategy, where you get your money back out. There's a lot of investment loans that people don't know about that aren't your traditional 10 or 15 or 20% down. And so we dive into a lot of those and teach you how to do that, because the way you fund a deal makes all the difference. Even if you overpay, like we're talking about. It's better to overpay for a deal and have the financing on your terms than it is to underpay for a deal, but the financing doesn't make sense and it's not on your terms and you're not really cash flowing that well. Number 3, okay, is forcing it. Now, this is my ultimate favorite strategy to get a solid deal in today's crazy market, and that is just getting creative. I'll give you a few examples of this, but being able to look at the same exact deal that everyone else is looking at, but having the foresight to look at it at a little bit different of an angle is phenomenal. And it's the concept of knowing how to fish versus somebody fishing for you. You can replicate the process again and again and again and find deals again and again and again because you know how to get creative. A most recent deal that I did to get creative was this home sat on the market for a while. Nobody wanted to buy it because it was kind of run down, and ultimately the numbers just didn't work. If you were to buy the house, fix it all up, rent it out, it just didn't make sense. Well, I looked at it at a different angle, ended up buying the house, demoing the house, and getting it rezoned because it's right next to an area where there's a college campus, and it's actually in the area where it's going to be in the future, student housing. So I got it rezoned for student housing, got it approved for an apartment complex. And so I took this, 2-bedroom, 1-bath house that everyone was like, oh, that's way overpriced, thought about it a little bit different, and now it's a home run deal. Another example is I bought a property not too long ago where, because it was zoned multifamily, the home itself was priced a little bit more, so a lot of people weren't interested in it, but I knew the zoning of it, and so what I was able to do is add more units in the back. Another example is buying a standard single family house, but converting it into a duplex. So a lot of times I'll look for this, and obviously you need to check with your local zoning laws in your city and all that stuff. But you can kind of look for this as you're looking for a deal. Is there a separate entrance, right? Is there a back door entrance that ends up to this side? Is there a way for me to kind of convert this, add a kitchen really easily where it doesn't cost that much money, but now I'm getting way more rent because there's 2 families living there versus 1 family living there. That's another strategy to really take advantage of prices being high in the market, but you'll be able to look at it in a different way. So now all of a sudden the numbers work because you're able to collect so much more rent. You guys get the idea. So I could go on and on and on and on and on about this stuff, but ultimately, like, the keys to getting a good deal in this market, it's not finding one. It's not like all of a sudden it just shows up on your lap and somebody calls you, or there's a secret website where you go to the website and all of a sudden all the deals are there and everyone's gonna wait for you to buy it for what you wanna buy it for. It just doesn't work that way, right? It involves a little bit of effort, a little bit of education, but ultimately, if you can remember these 3 things, the way you find it, the way you fund it, and the way you force it, you're gonna be able to find deals all day long. Hopefully that was helpful. Subscribe if you enjoyed this, if you liked it, and more coming.